Hey guys, welcome to the Trade Genius podcast. Bob and Phil here. Tomorrow is a big day for the market because Jerome Powell is speaking at Jackson Hole. Last time he did that, the markets had a fit and tanked. So what's going to happen tomorrow? We think we have a pretty good idea of what he's going to say and the stance he's going to take and the expected reactions. So let's dive into this video. You're not going to want to miss it.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
So Bob, tomorrow, big day in the market, but the market wants some dovishness out of Powell, but the data suggests otherwise. What do you think?
Yeah, no, I think the charts that we're going to show you guys are going to basically the view that Phil and I at Trade Genius we've had and we've maintained and we will maintain is that we are in a stagflation environment or an inflationary depression, however you want to categorize it, where the biggest casualty will be basically sales units sold. And that's what we're seeing. So nobody's giving up on price. Price of homes aren't going down. Price of cars aren't going down. Prices paid, manufacturers' expectations, consumer goods, the whole 9 yards. Prices are staying elevated. Powell has not broken the back of prices paid yet. And I think the same thing shows for employment too, Phil. Wages paid. And, you guys can read the news as well as we can. Everywhere you turn, if you have any kind of oligopoly on labor, i.e. you're in a union, you have a special job, this, that, whatever you want to call it, is those wages are flying at well in advance of 3% a year. And so the Fed's stuck. So he has no choice but to utter the phrase, higher for longer until he breaks these expectations, Phil.
Yeah. And, the only thing really pulling this market along right now is tech, right? We saw the NVIDIA earnings blown out. And so, as we warned, NVIDIA could make another run up. And but today it gave it all back, right? The NVIDIA closed the gap from the earnings move overnight. The entire stock market basically round tripped, meaning that it fully retraced the move up into the close here, end of day. So that tells you okay, so the market's thinking what tomorrow? So, I think the jump in these graphs here, you have expected wages jumped up a whole bunch. That Philly Fed, that first graph we showed, expected prices paid. I mean, to me, that's just screaming inflation, right? So I think the Fed tomorrow is going to maintain much of what they said last year. Now, whether the market has a bad knee-jerk reaction off of that, I'm not sure, because they've basically been maintaining this hawkish tone, right? All through last year, all through this year, and yet the market has rallied from the beginning of the year. So I think what the market's probably going to be looking at is whether or not, are we starting to roll over ultimately into a recession? And that's really going to be dependent on economic data, something we're going to cover tomorrow. So the reason why I think they're going to stay hawkish, Bob, is this next slide that we got, and that is basically an overlay of the core PCE versus the unemployment rate. Now, I think people have forgotten, but Powell basically stated last year that he's on a mission to get the core PCE under the unemployment rate. And that's why they keep harping on the job market, and they want the job market to kind of be, soften here. So as you can see, the red line is a core PCE, 4.1% unemployment rate, and the yellow line 3.5%. So this is where you are looking for the Fed to do their pause or pivot, is when the red line crosses under the yellow line, and whether or not the unemployment rate goes up to do that, or core PCE continues to come down, which these graphs are saying probably isn't the likely scenario. So we're probably going to have inflation creep up or stop going down here into the next couple of months, that means it's going to be all about the jobs data. So until jobs really start rolling over here, the Fed's going to maintain their hawkish tone. I think he's going to tell you that don't expect any cuts until 2025. And really, I think the sensitive subject is going to be whether or not they raise expectations for the terminal rate over 6%, Bob.
Yeah, look, I mean, I think we're holding to our bear steepener position is that that Powell has really three things to say, right? Growth is higher than it should be. He can't say that. Growth is lower than it should be, so I should cut. He won't say that. And what he's gonna try to cut it right down the middle, which means the people that are expecting cheaper financing are going to be disappointed, which is going to affect assets. And he's not going to give relief to the consumer, which is going to affect sales. So I think we're going to get that bear steepener where we stay wide on the inversion for short term, but the whole complex shifts down, and it's going to support the gold scenario. And then I agree with you, Phil. In September, they're going to revamp the unemployment numbers again. I think I thought it was 500,000. You said they revised it down to 300,000. It's going to pop that yellow right over red. And lo and behold, Powell is going to be pausing here in September. That's my view.
I think that's a very plausible scenario. Guys, what do you think? Let us know your thoughts below. Please hit that like button. Also, check out our stuff at tradegenius.co. We have our newsletter that gives you kind of guidance every day on the markets, as well as our trading packages. We'd love to see you guys in the room. See you on the next video, guys. Take care.
Trade Genius.